Everyone. In this video today, I'm going to talk to you about how to buy treasury bills in Nigeria. How to buy treasury bills in Nigeria. What are treasury bills? Treasury bills are short-term debt instruments issued by the Central Bank of Nigeria on behalf of the federal government. They are considered one of the safest investment options as they are backed up by the full faith and credit of the Nigerian government. Treasury bills are popular among investors because they offer a risk-free return on investment and they can be an effective way to manage liquidity and earn interest on idle cash. In this video, I will walk you through the steps to buy treasury bills in Nigeria. I will also explain how they work and provide insights into why they might be a good investment option for you. Now, let me explain again what treasury bills are. Treasury bills are government-backed securities that have a maturity period of less than 1 year. They are issued at a discount to their face value, meaning that investors purchase them at a price lower than the nominal value and receive the full value upon maturity. The difference between the purchase price and the face value represents the interest earned by the investor. For example, if you buy a treasury bill with a face value of 1 million naira at a discounted price of 950,000 naira, you will earn 50,000 naira in interest by the time the treasury bills matures. Now, what are the types of treasury bills that are available in Nigeria? In Nigeria, treasury bills are typically issued with three different tenures. The first tenure is 90 days. The second one is 182 days. The third one is 364 days. Investors can choose the tenure that best suits their investment goals and liquidity needs. These are the steps to buy treasury bills in Nigeria. Number one, open a bank account. Before you can purchase treasury bills, you need to have a bank account with a commercial bank in Nigeria. Most banks offer treasury bills investment services, so you can easily purchase them through your bank. Number two is you have to choose your investment amount. Decide how much you want to invest in treasury bills. The minimum amount you can invest in treasury bills is usually 50,000 naira, but this amount can vary depending on the issuing bank or broker. Number three, approach your bank or broker. Once you have decided on the investment amount, approach your bank or an authorized broker to place your order. You can do this by visiting the bank in person or by using the bank's online platform if available. Number four, submit your bid. When purchasing treasury bills, you can submit a competitive or non-competitive bid. Competitive bid, what does it mean? In a competitive bid, you specify the yield you are willing to accept. However, this is more suited for institutional investors with large sums to invest. In a non-competitive bid, you accept the yield determined by the market. This is the option most individual investors choose. Then number five, you await auction results. After submitting your bid, the Central Bank of Nigeria conducts an auction to determine the yield. Your bank or broker will notify you of the result and the yield at which your treasury bills was purchased. Step number six is the payment. If your bid is successful, what then will happen? You'll be required to pay for the treasury bills. The funds will be deducted directly from your bank account and you will receive a confirmation of your purchase by the debit or by email or by text message. Then step number seven is you have to hold on to your treasury bills until maturity or trade. You can choose to hold the treasury bills until maturity and receive the full face value that was promised at the time you were buying. Or you can sell it in the secondary market if you need to liquidate your investment before maturity. That means if you need money before the time 364 days that was specified in the treasury bill contract and you just bought it after 30 days you need money, you can sell it off in the secondary market and get back your money. Now, here are the benefits of investing in treasury bills. Number one, safety. Treasury bills are virtually risk-free as they are backed by the government. Number two is liquidity. Treasury bills are highly liquid and can be sold in the secondary market before maturity. Number three is fixed returns. The interest rate on Treasury bills is fixed, providing a predictable return on investment. Then the next one is tax advantage. Tax advantages. In Nigeria, the interest earned on Treasury bills is exempt from withholding tax. Now, these are the risks you need to consider. While Treasury bills are considered low-risk investments, they are not entirely without risk. One risk is the possibility of inflation, eroding the real value of the earned interest. Additionally, the return on Treasury bills may be lower compared to other investment options, such as stocks or real estate, especially in a low interest rate environment. So these are how you can buy Treasury bills in Nigeria. Somebody have asked me that is in Canada, somebody is in US, somebody is in London, UK, that how can they buy Treasury bills in Nigeria? These are the process. You have to have a bank account in Nigeria. Maybe you can now send money to somebody or to your bank in Nigeria, and then you can have your Treasury bills in Nigeria. Then if you open a bank account in Nigeria, most commercial banks in Nigeria have they do diaspora banking, whereby you can deposit in dollars and you can receive your money in your account in naira, or depends on how you discuss with the bank. So you can go ahead and discuss with the bank and see how it goes. But the caveat here is that sometimes the banks can be funny. They may not attend to you as it ought to, especially when money is in the account or when you want to move money out of the account. The amount of scrutiny is much. So if you are based abroad and have opportunity to visit Nigeria maybe once in a while, you open your account in naira and you fund it, and then you buy your Treasury bills. Make sure that you can control your account using online banking. So online banking, your ATM and other such, and then in 5 years that the ATM card will last and everything will last, you don't need to have any problem with your bank again. All you need to do is to be transacting and buying and selling and moving money around in your account. So these are how you can do it. And if you need more, have any other question, you can ask me in the comment section below, and I'll be glad to come around to answer your question. So until next time when I come your way again, please invest wisely and diversify your investment. I will see you in the next one. This video popping up by the side is the next you need to see now. Talk to you soon.